Hey there, okay, this is going to be video number 68, but number 30 of module 3. And we're going to be using the iMACD and the ADX with this particular setup. Alright, it's a pretty simple one. It's not going to be too taxing on the brain. Alright, all we're going to need to do here is just go ahead and grab our crosshair tool out just so I can show you. Again, what we're looking for here are not really where the ADX is, but I'm looking at where the negative and the positive directional index actually cross over each other, and I'm looking for it to line up with the actual point at where the iMACD crosses. Alright, you can see that when we run some little back tests on here, that every time it crosses above and below, it doesn't always line up with the ADX. So it takes away any questions that turn around and say, well, you don't really need to use the ADX when you can just go long and short every time that the iMACD crosses over each other. Yes, you could very well, but you're not going to get 100% perfect trades out of them. Hence using a secondary indicator. Okay, and we need to sort of make sure that if we're going to act off the iMACD's crossover when it crosses one way or the other, then we need to make sure that the ADX is telling us that it's okay, that we can go ahead with that decision that we've just made. Alright, so let me give you a quick example. Alright, let's get this out and let's take a look. Okay, you see that this particular point where it crosses, we're not worrying about this black line, we're worried about point where the positive directional index, the green line, has crossed over the negative directional index, the red line. At that time, it would have been better to really have the iMACD above the histogram and to have this crossover above, but generally, more times often than not, you will see that when they get quite low, quite close to the vertical scale, it's like a preparation of the trend going up the other way anyway. How long that's lived, we don't know. But for the most part, you don't really need to really worry about where this crossover appears. You just need to ensure that you're reading the ADX signal correctly as well, and that the green line, the MACD line, is actually above the trigger line, right, the signal line. And the colors of the bars of the candles doesn't really matter, but again, if you want market sentiment, and go with the green bars for an upwards trend. I mean, you can take these little pieces of information and use them how you wish to suit your trading style. Alright, here is another area right here where the market crossed, the iMACD crossed here, but there's no cross here, so we wouldn't have actually acted off of that one. We've got another area right here, give or take again within one bar, because I couldn't actually get my line in, so you have to again be a little bit lenient. Here's where it crossed over. Again, it crossed over here and then the market went up. Let's take a look at this one here. Okay, that one's not really a signal. We've had to be too over lenient by about 2 bars, and I'm not really comfortable with being too over lenient. Same again with this one, we had to be about 3 bars, 2 bars within it, so that's no good. Okay, so here's one right there, but again we need to use a bit of initiative, and we can see that we're in a sideways trend beforehand. That's going to be a bit of a resistance area, so we would ignore that one. Alright, this doesn't actually line up with the crossover of the ADX, so we can move on. There's no line up here either, so we can move on. No line up there either. Okay, and well, we have to give or take 1 bar here, so that's okay. Within 1 bar allowance, that's perfectly fine. Again, using your support and resistance areas to gauge whether you should get into that trade or not. This one here is also within 1 bar, so that can be forgiven a little bit. Alright, but I really would rather focus on ones that line up perfectly. Then you should really have no emotional corrections there at all. We really want to try and trade mechanically. That's within range. It's kind of unforgivable range, but again we prefer to have something that's ready certain to give us what we're looking for. But it's a basic strategy. I mean, it's one where you don't have to sit there and work out all the ins and outs of trading to work out whether you should go long or short on it. And no, but when they do come in, you know, they do tend to generate some nice profits on them. Alright, so well, this is going to be a short video, I'm afraid. Let's go back down to the 4-hour time frame, see if we can find some more. Oops. And let's see, let's take a look. Okay. Alright. Now here's an area that would have been quite interesting for some people. Is this market situation right here. We are basically within our allowance. Alright. But then if you'd gone short on the next bar like you're supposed to, you've gone short on this little small bar, even me would have thought that this would have come down. I mean, look at the market sentiment there. It's a huge bar there, but I need to get some more information. And we can see over here on the left, we can see probably the reason why that dropped when it dropped. Alright. I mean, I can tell you right now that most people don't really look over to the left. Out of all the people that I've traded with, and out of those that have actually known how to trade Forex, it's very rare for them to look back to the left. I would say probably 3 out of 10 traders don't look back to the left, or 4 out of 10 traders don't really look back. Alright, but yeah, so go ahead and take a look back, and we can see now that the market has now changed and gone back the other way. Don't sit there and think, oh, okay, well, you know, the red's going to go back again or whatever. You need to sort of really, if you're in that trade, then I would try and get out of that trade as soon as possible. You know, if you hadn't already looked back here. Alright, so be careful of those when that happens. Here's another area that we could have probably got into, and that would have been around about here. And again, you can't always get these bars bang on. See where it's kind of, it sits there, or it sits over there on this ADX. It's not sitting right in the middle. So you have to kind of be, you know, a little bit forgiving. But this bar for the iMACD lines up pretty well, so that would have been a pretty good area to get in and go short on. Where you get out, I mean, it's completely really up to you. Look to the left, look for previous support levels. Another area as well is that, I mean, you can take a look at, see where this crossover is of the iMACD. You can get out there, but again, that doesn't always work out well in your favor when you get out on the next crossover. So I would really sort of try and target previous lows, and just be patient for them to be hit. Alright, so play around with that strategy for 2 to 3 days. Okay, and I'll see you very soon in the next video. Bye for now.